Hey everybody, Marty Mazur. Good evening, February 25th, 2016. Just a quick commentary for you. The stock market is getting more interesting, certainly by the day. Here's that 60-day, 60-minute chart I keep showing you. 2 weeks ago we were here. I said the market looked way oversold. Expect that maybe there'd be a bounce in the near term. It bounced very aggressively, actually, and then looked like support, maybe a little resistance. But the fact that it stayed above on a closing basis, this retracement, 38% retracement level, which is essentially here's where a recent peak on December 29th, here's a bottom on January 20th. As we retrace this particular decline, we have all these different retracement levels. Now, the three that seem to be most important to technicians are this one, the 38, the 50 especially, and then the 62. So I told you here that that was an interesting, maybe a show of strength, and to look for the potential for the market to go higher from there. Sure enough, it shot straight up against that 50% retracement, and then it basically died there and came back for a couple of days, as I said it might. And to put these levels into perspective and to understand what goes on there, again, here we are coming down from December 29th all the way to January 20th, and for whatever reasons, traders saw that as support, so the market got bought. So stocks got bought all the way up to the 50% retracement level. Then they sold it all the way back down to here. So think of it this way: the folks who didn't buy here, who watched the market go up noticeably, got a second chance and decided they didn't want to miss that opportunity, so bought right at that same level that it bottomed at before. Then the market came up and got to that 50% retracement. So imagine the folks here who didn't get out, who watched us come all the way back down to the bottom, got a second chance and took that opportunity and sold. Then we got this happening. Now, I didn't expect it to bottom here. I honestly thought it would go noticeably lower. But when oil turned, stocks turned with it. Then we came back and went pretty much tested it and then went right through this resistance level. So perhaps the selling that was going to happen here has already exhausted itself, and maybe a new trend is afoot. Way too soon to tell, but in classic technical form, if it is, what would happen is this would move higher, might just go right through it and forget all about this, or could very likely come back and test this a couple times, and then that becomes support, and traders view that differently and then buy off of those levels and then push the market up to test these next support lines moving higher. One other reason why I think that may be the case is when I look at the 50-day moving average, and that's this orange line here. This is an important indicator for technicians. It's beginning to flatten out, and today the index closed above its 50-day moving average. That is potentially a very strong technical signal, and I promise you technicians are paying very close attention to that, and they're going to be looking for some confirmation tomorrow that stocks are going to begin to trade at a new level. And I think one of the hesitations is really, of course, what oil does, because stocks seem to be very, very, very correlated to oil even still. I've explained why, and I don't think it's permanent. In fact, I know it's not, but it's definitely the relationship today, and that's really what we've seen here. So that'll be interesting. We could certainly come back down. It could be that scenario I've been trying to prepare you for, where stocks trade lower, even below these support levels, before they finally bottom later in the year. But right now, I would have to be constructive on the technicals and tell you there's a pretty good likelihood that maybe we move higher. We're not oversold, we're not overbought right here. I think we can go in either direction, but I'm seeing some signs of strength. Another sign of strength is the breadth of the market. Just over the last couple of weeks, the leadership cyclical sectors have now added to the leadership. I think the way to say that is, so far this year, the leaders have been utilities, staples, and telecom, which are three very defensive sectors. You don't get real excited about the stock market when the stocks that tend to do best during economic slowdown are doing best. But more recently, just the last couple of weeks, consumer discretionary, now 58% of the stocks in that sector are trading above their 50-day moving average. 67% of materials and 72% of industrials are as well. We're waiting for financials, energy, healthcare, and technology, and we'll need to see those trade better for this to really look like a sustainable move higher. but the breadth is improving, and that's a pretty positive sign as well. So, folks, again, those of you who are clients who watch and listen to my stuff, you guys are long-term investors. This is not something that's actionable for you. What it is, though, is something that I hope helps you put some of this short-term stuff into perspective. I think the more I help you understand what's happening internally with the market, it helps you put into perspective a lot of the stuff that you hear in the media, which is really just designed to get your attention. And it seems to me that the more we understand about market volatility, the better we feel about being in the market long term. So that's really my objective in taking you into these particular weeds. So folks, I'll leave it there. Thank you, of course, as always, for watching and listening, and I'll be back very soon. Have a good night.